this is John Michael Lust, Vice President of Operations for Plan Scout. Today, I'll be showing you how to use dynamic mode in the SIPS retirement planning system. Dynamic mode acts as a worksheet to make it easy to quickly iterate on a plan without switching back and forth between screens. The dynamic mode feature is already live and available in our SIPS Advanced subscription plan, so let's get started. So some of the common scenarios that we often come across when we are building plans in SIPS are times when we're trying to solve for a particular issue. Maybe we're trying to figure out how to close an income gap or how much we can Roth convert in a particular year and stay within a certain tax budget. And typically, normally we would go into our SIPS plan and we would make our changes in our accounts and our incomes pages, and we'd go back, then to the plan, we'd check our work, and then we'd iterate on that again. So with dynamic mode, we can actually do a lot of this iterative work without changing screens. So here we have a plan. This sample client is retiring in a couple of years, and they've got a lot of IRA assets. And, today I want to look at how we could Roth convert some of these IRA assets to use some of the tax bracket room that we have in years 3 through 10, avoid some of these excess RMD withdrawals that we can see happening, from year, 15 plus, and smooth out this tax curve here where we can see, right now, as a result of those RMDs, the taxes are escalating later in the plan. So typically, if we come in here, we might go into our account, and in this case, the IRA, we'd put in a withdrawal. Maybe we want to say, what if we withdraw $100,000 here? We'd save that, then we go to the Roth IRA. We'd add the savings, $100,000. And we come check our work, and we could say, okay, maybe this is good. Maybe, this $34,000 is a little bit high. So if we wanted to iterate on that, then we'd come back down. And maybe we change the withdrawal here. And then maybe we go to the Roth IRA. We change the savings. And then we would check our work again. And we would rinse and repeat, for every year that we need to, do this analysis for. Now, with dynamic mode, what we'll do is we'll save our plan. And when you save the plan, now you'll go back to the screen where you can either edit to get back into the plan, or we can click dynamic mode. So we click dynamic mode. What it's going to do is unlock a lot of these cells on the structured income screen. We can see we can change things like the growth rates on the account, the initial balances. We can change withdrawal amounts here, or cash flow amounts on the income side. We can change inflation factors. There's a few things that'll be automatically calculated for you. So taxes will remain automatically calculated. If you have a makeup withdrawal on an account, it'll automatically, update these values. And if you've got something like a liquidation withdrawal type on an account, that'll actually be locked and will automatically calculate based on changes to the account value or other withdrawals you do from the account. So let's say for this client, we wanted to target $30,000-ish a year, kind of 30 to 35. We wanted to see how much, we could Roth convert to fill up these tax brackets. So, I can change this withdrawal and this savings that I already put in here. And, I could add this for following year. So let's say, for these 3 years before he starts Social Security, what if we convert $100,000 a year? So I'll do $100,000 out of the IRA to designate the withdrawal. And then I'll do minus $100,000 to the Roth IRA to show the savings. The way to think about this is these are representing the cash flow. So a withdrawal is a positive cash flow right into the client's pocket, and the savings is essentially like a negative cash flow. It's being taken out of their discretionary income for that year. And we can click calculate, and now we'll see that the plan has updated the taxes in this year, as well as the account values in the accounts that we've adjusted. And then all of the cells that we've changed in dynamic mode are highlighted in green. So we know these are the ones that we've manually edited, and the remaining cells are just in white. So we can take this a couple steps further. We could say, okay, we contribute convert $100,000 a year for the 3 years while they're working. We can see this has reduced the surplus RMDs that we've been taking. Our taxes have been reduced from about $745,000 to $626,000. We could take this a step further and say, okay, well, now let's keep going. In year 6, we've got Social Security, so that's going to change our tax situation. Maybe if we convert 100,000, maybe now, we're paying effectively 15% in taxes. This tax is maybe getting a little bit high for once we start Social Security. So let's bring that down a little bit. Very easy for us to adjust the numbers here. 75,000, maybe we're more comfortable staying in this kind of $20,000-ish range now that the client's taking Social Security. So we can run that all the way down until they begin RMDs. Oops, and now we can say that maybe that was a little bit too much. We had IRA money that we could Roth convert, but we've run out of our non-qualified savings, which we've been using to make up our extra tax bills. So very easy. We can take this. We'll reduce the conversion amounts here. We'll reduce it on the withdrawal side with making it 60,000. Then we'll put minus 60,000 on the Roth side to show the savings to the Roth account. You can type it with minus sign or in parentheses. It'll be the same thing. Okay, 60,000 is maybe still a little bit too much, but I bet if we do $55,000 a year for these 5 years, I bet that'll be okay. And here we go. So now we've Roth converted a total of $575,000. We've been able to use our non-qualified funds to help pay for the tax bills during those years, as well as, balance out what we're taking from the RMDs. So as a result, we've used up our excess tax capacity in the low tax years. We've smoothed out our tax curve later on in retirement, and we've reduced taxes by about $190,000 from where we started before. So now all we'll do is, now that we've figured out the solution to the problem that we were trying to solve, we'll leave dynamic mode. And we're going to go back to edit, back into our scenario. We can see the old withdrawal that we had is still here. So we'll just go to our IRA and we'll click manage. And we'll put in the transactions that we had figured out are appropriate for the solution. So in this case, it's 3 years of $100,000, 5 years of converting $55,000. We'll add the savings to the Roth. And here we go. So just like that, we were able to, on one screen, figure out the amount that we can convert each year with using dynamic mode. Stay tuned as we share more information about all the exciting new features coming to the SIPS retirement planning system. For more planning resources and tutorial videos, please visit www.sipsplanning.com. For more information about our outsourced financial planning services, please visit www.planscout.com. Thank you very much and have a great day.